The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, pretty safe to say that the grain and oilseed trade had a risk-on day on Friday, with the only exception being bean oil moving lower with the crude oil market, but the dollar breaking again, and that gave traders reason to put some money into the grains ahead of the weekend. We're going to talk about it here today, talk about some of the carry in these markets and more. Let's have a discussion with Christy Van On Sheeseth with Van On and Company joining us here today on Market Talk. Christy, always good to talk with you. I hope you're doing well there in central Minnesota.
Yeah, it's great to talk with you too, and TGIF, man.
I know, right? Another good fall weekend in front of us. It sounds like temperatures are going to be a little bit warmer and let some of that remaining fall harvest and fall field work get done, because I know, especially across the northern plains, we still got a fair amount of corn that's got to get out of the fields here, Christy.
Yeah, that's been kind of the chats that I've had. Things are getting a little soft right now because there was moisture. We still have a little bit of snow on the ground, not a ton, but enough to kind of cause some issues. But things are getting a little soft. So I think the sooner these guys could get done with the rest of harvest and field work, I think the happier they would be. It's kind of, they got this nice push in the beginning, and then it's really dragged out the rest of the time. So I think this weekend looks like it's going to be a good one. We had a good day for the grain markets. It's been a while since we've had a grain market be able to sustain itself throughout the day on a Friday. So last Friday, we saw that strength into the soybeans, but ended up kind of fading throughout the day. And it was really nice to be able to see this stick it. And to be honest, soybeans made very good trade today when you look at the January contract through the 40-day, through the 100-day, through the 200-day moving average on the charts with some power. And so as long as we don't have any sort of really change in the weather forecast for South America, I think that you could see this kind of support itself and try and get after some of those higher targets. The targets we're looking at for January soybeans, 13.61. We're not that far from that. And then above 13.61 looks like $14. So hopefully we can go after some of those. We've used these rallies as opportunities to really go after some marketing over the last couple days here at Van On and Company. So that's been nice to see, as before, really with those November futures, it seemed like we couldn't really get through 13 and be able to do it with some power. So it's nice that we now have the carry and a couple good days back to back.
Yeah, and I had a handful of text conversations on the day Friday, and I'm thinking you probably had some of the same. I think this rally in the soy market, the dollar breaking the last couple of days, I think helped as well. But this overall rally, I think it's spurred on a fair amount of farmers selling, maybe not in the corn market, and we can talk about that in a minute, but at least on the soybean side here, Christy, it really feels like that this was the catalyst, and that there's plenty of guys and gals who are kind of saying, you know what, if I can get $12.50 cash for beans, I can make money here. I'm taking it. I'm done. I want to be out of this market. I'm getting a lot of that feeling here as we wrapped up Friday's trade.
Yeah, so am I. And to be honest, I think there was quite a few beans sitting at the elevator. And so it's easier to pull the trigger when you're sitting and you don't have to haul them in, right? They're already there. And we have to remember that storage charges at the elevators are going to be higher this year. So I've heard a lot of soybean charges being close to that 8 cents a month. I've heard some of them be that, hey, you got to pay 20 cents to get you through the rest of 2023. And then from there, it's a monthly charge. So you see these kind of these higher storage rates eating away at some of that DP. And then we have to remember, we have high interest rates. So if you can take this cash in hand, to be honest, with where interest rates are, the payments, the cash that you could get from these sales, 3-4 months from now, you could sit there and say what I've paid or I've saved in interest. I could come in here and buy a call if I really wanted to. So I'm not saying you really need to. I do think that, you should be looking at some form of marketing right now. We went after sales into the March timeframe, a March HTA, because there was carry from Nov to Jan. There's carries from Jan to March, and March is really holding this premium. That's really nice to see, and that's a February delivery if you want it to be off of March HTA. So that's where we looked at for those. We even dabbled in a little bit of Nov 24 marketing as well. You look at that, close to $13, and we just don't know what's going to happen, right? We've put a whole lot of premium into this soybean market based off of South American weather. We have to remember that South America right now is kind of that planting time frame. About, I think last I saw, it was like 56% planted. So you're looking at really the United States being in that May time frame. And so when we're looking there, when we're planting our crop, we know how anxious we can get. You know that once things aren't going really well, we build this premium into the market. But once it's planted and that first rainfall comes through, a lot of premium usually gets taken away from this market. And that's the time frame we're in right now for soybeans for South America. So we need to be watching that. The US dollar, like you said, this is a huge pullback on the US dollar. This should really help with some export sales. But if we come into next week and we're not seeing these export sales materialize, that's going to be a little bit concerning. We have started to see some small trickle of sales, and we have to remember, not that long ago, it came out that Chinese officials in Iowa signed a deal saying they were going to buy some commodities. We have not really seen a ton of that show up. And so if we could see that, you're looking at the support. So there's so many things that you can move to these soybeans that could be supportive. There's a lot of things that could easily take some of this risk premium out. And whenever we get into that situations, we just feel like it's the right decision to do some sort of downside protection, just to make sure you're not going to sit here and say, hey, we're 1351 today, but by next week we can be 1280 again. We saw how fast corn fell. Beans can do it even faster.
Well, and you made a great point there. There's so many of these outside factors that could move this market one way or another. I mean, you got all this war issues, you got the weather in South America, we see the dollar break, et cetera, et cetera. So it feels to me like it's a bit of an easier conversation, at least in soybeans, to take advantage of this rally. And to your point there, not just 23, but 24 beans as well, because just with the unpredictability in this market right now, Christy, it's almost, it feels prudent, and it feels like a no-brainer to manage your risk off this soybean rally right now.
Yeah, it really does. And to be honest, if you're looking at it and saying, hey, I feel like this market could really blow up, there's some super doable January soybean calls that get you to December 22nd, I believe it is. So that Christmas timeframe. And, it's not a for sure thing, but we usually know either the bull takes Thanksgiving or Christmas. So you're kind of covered in that call. You're not going to see a South America hard weather story. The heat, the drought, the poor yields. That January call is not going to get you far enough along, but it should get you that emotional push if we don't see the rains materialize, or if we don't see the rain stop for the southern parts of Brazil. So I think, you can still be optimistic, but you can be making some risk management choices. And I think that's just a smart thing to do.
Well, and on the flip side too here, this corn market has been pretty rough. I know we went down and got close to the contract low in D's corn here this past week, and then we're able to rally off it on Friday. Different conversation though, it feels like, in this corn market right now, just with how the board is, how cash basis is for corn. Feels like a much different conversation than soybeans, is it?
Yeah, I think so. The conversations I had in soybeans today usually led to, well, what about corn? And I'm like, you don't want to hear my opinion in corn right now. I struggle with the corn market. I think that it's got an uphill battle to a degree. I'm going to be honest, if we can get March futures back up to those recent highs of 510 to 520, I'm going to be looking at some form of marketing for corn. I think that the basis push is coming for our area into the Dakotas. I do think that basis could really help out this price. But the futures, I think, have a little bit of a struggle. I think what brought them higher here were soybeans today. And I looked at the markets this morning when I got into work. I was like, here we go. We're going to make new lows. This is not going to be fun. And like you said, we held those lows by a quarter cent. And so if we can build off that, that's great. That's fantastic to see. The charts on wheat look good. So if we could get these markets to kind of push, I think that's your chance at corn. But I would be I guess in our opinion, we're going to be marketing on corn sooner rather than later. And hopefully we can get into that 525 area for March futures.
We are talking today with Christy Van On Sheeseth with Van On and Company here on Market Talk. Christy, I think corn as well, kind of tied with this wheat market trade overall. Wheat, of course, has just been a dog, a bear of a market here. I think more so than corn, to be honest. Winter wheat plantings going along nicely for the most part. What's your take in this wheat trade and how maybe it's in some ways held down this corn market a little bit here in the last few weeks?
Yeah, I've never been a big fan of wheat, to be honest. And this last 6, 7 months has solidified my hard feelings on wheat. So it is not fun to deal with right now. And every time it looks like you're kind of going to build out a bottom here, it trickles and bleeds lower. And it's like this slow drain on the prices. It's like, it's not even like you're like, oh man, corn's down 20 cents. Or I mean, wheat's down 20 cents. No, it's like 1 cent lower, 3 cents lower. And before you know it, we've slid like 40 cents and we're trying to find a bottom. We have positive divergence in a major way for the December Kansas City wheat contract. So if we could build off of this, it's like a technical dream when you want to look at these markets, but we have to do something with it. And it was disappointing to see that Kansas City wheat couldn't do anything with it today, right? We had soybeans over 20 cents higher. We had corn up 7. We had Chicago wheat up 7 as well. And then you're sitting here and you're saying, all right, Kansas City wheat can be up 2 on the day. So it's been a struggle to see this really built out of here. I've started to see some basis opportunities be better for spring wheat. So hopefully we can see the futures board follow through with that. But it has been just a dog. And I do think it's weighing on the corn market because corn seems to kind of be tethered to it. And even today, you saw corn initially build that support, came back, and luckily you're able to close semi-positive up 7 cents. But there was points that corn was really showing some cracks in it on its ability to sustain some rally power.
Well, and thing as well here with this wheat market is that, it's such a global market. Russia's got so much cheap wheat. I mean, we talked about this before on the show here many times. It almost feels like that until there is a major problem in Russia, for instance, that, can't be ignored or can't be, explained away by some Russian news agency, and we have no idea what's going on there until there's a major big event. It's kind of one of those things where it feels like this wheat market's just going to be in the doldrums until something like that were to happen, Christy.
Yeah, I agree with that. And I think everything happening over in Israel and Gaza has taken some attention away from the issues in Ukraine and Russia. And so you haven't really had that, strong pounding of talking about Russia really poorly in the markets right now. And so I think they're kind of getting this chance to get some wheat out the door. And I think that they're suppressing the world market. And like you said, this is a world market. We have a lot of demand. The concern would be, we saw for a while China coming in here and buying some wheat purchases from us, and then that kind of shut off. So I'd like to see China step back in for some wheat purchases. That would be great to see. But it's been a little bit on the dry side lately.
Let's talk livestock. Complete opposite of the grain trade on Friday, as cattle and hogs had a strong day Thursday and then moved lower on Friday. Do you feel like that was just a case of just a round of profit taking, maybe trying to take a little bit of that strong move from Thursday and take it off the board heading into the weekend, Christy?
Yeah, I think for feeder cattle, you're looking at just corn being higher and finding that liquidation. Looks like cutout values were a little bit lower as well. So that did not help out the markets. But you're looking at live cattle have done a good job of rebounding. And now now you're trying to say, hey, feeders, come along for the ride too. You got to get moving. And yesterday looked like that chance, and then they gave it back. Not all of it, but some of it today. Hogs, kind of that same situation. We've made a very good comeback into the hog markets, but now we're looking at a 100-day moving average for these hogs, and you're finding this kind of selling pressure. Overall, it does feel like the market's very optimistic on the economy. We flipped from a very, very negative tone to a cheery tone very quickly. And that was a concern we had as well that we started kind of talking about, is that you had interest rates come in here unchanged. And before you know it, you had, US dollar down, you had the Dow up multiple days in a row, commodities up multiple days in a row. And we just have to kind of put a tamper on that and say, hey, if we're going to all of a sudden be very cheery on this, we also have to think about the fact that maybe now the Federal Reserve is going to say, hey, we paused rates, we didn't do anything, and we started to see inflation come right back up again. So this is something we need to be attentive to. And so I just feel like the market kind of got ahead of itself. And I was thinking that maybe that cheery economic mentality that we've had, especially into the stock markets, would spill over into the meat markets a little bit more. But we just didn't see it finish that way.
Well, I wonder too, as well, and this is more of an impact, I think, in this cattle market. Obviously, as we think about feed needs, corn with the levels that corn is at, is it an opportunity for a lot of our feedlot guys to lock in some of those feed needs for winter if they haven't done so already, or lock in a few more and try to balance things out here as cattle futures have kind of settled back to a new range here off the most recent highs. I guess I wonder, thinking about feed needs and just where we got to maybe source some of that grain from here this year, maybe some abnormal grain flows throughout the country, maybe seeing some grain moving from east to west this year or something like that. So I think that's something to think about here too, Christy. What do you think?
Yeah, definitely. So when you're looking at, especially for the corn market, meal, a little bit of a different story, right? We've seen how crazy meal has been in this last time frame. So we're not going to talk about that right now. But when you're looking at the corn market, we are at or near the recent lows. And if we were to break that 467 and 3/4, your next key level of support plus psychological support is 450. And so as a feed need person, I really think you need to be looking at this level and saying, hey, I need to protect it some way, somehow for my feed use. Maybe that's buying the physical corn. Or to be honest, there's not much volume in or interest in buying corn right now for calls, that the calls in corn are extremely cheap. So you can look at a December or a January call at near the money. Like I think a $5 was 8.5 for Dece and 13.5 for January. Those are the ability to come in and look at those calls and say, hey, I can get through a couple months of feed needs with this call to cover it in case something happens, with limited amount of risk on the table because you're buying that option. So the risk on there is the cost of the option plus commissions and fees, obviously. But I think that's just a smart way to look at it right now for those cattle guys to really be doing that, because I don't know, you don't know, no one knows what could happen with prices. Yeah. But the fact that what meal did should just keep people on your toes to say, hey, if I have the profitability there, let's make sure we're doing something about it.
All right. Great stuff. Before we let you go today and wrap it up, anything final, anything you would reiterate to folks listening in just as they're thinking about things here heading through the weekend and into next week?
Yeah, I think you should just really focus on carry right now in the markets. The carry in beans is phenomenal. If you're looking at making some sales, you really can look out to that March HTA timeframe and deliver on it into, to be honest, they're going to be delivering off March HTAs by January. So that gives you the ability to kind of get to the new year, get some grain out of the bin, see how it's holding up, and be able to get some cash flow rolling right away into the new year. So really look at those carry opportunities. The carry opportunities are also there into the corn market. So I don't think this is really going to be a large population that has the ability to, but if you're sitting on some December HTAs right now in corn that you don't think you need to deliver by the end of the year, you can pick up 15 cents by rolling it out to a March contract. Just make sure you're looking at those opportunities. Those are simple, smart choices you could be making on the cash side of things on your own.
Christy, great thoughts. If folks want to reach out to you and your team there at Van On and Company and get some marketing advice, I know they could do that very easily. How can they get a hold of you?
Yeah, you can call us at 1-800-648-5494.
And I know they can check you out online as well at vanonco.com. Christy Van On Sheesith with Van On and Company. Always a pleasure to talk with you. Thanks for the insight. Have a great one, and we'll talk to you again soon.
Thank you.
That's going to do it for Market Talk here today. Find us online at markettalkag.com. Have a great weekend. I'm Jesse Allen.